In this month's Property Insider Chat, Dr. Andrew Wilson and I discussed the latest My Housing Market end of April results for houses and units around Australia. And while property prices have grown for 15 months in a row now, you'll hear how price growth is slowing a bit and how fragmented it is, how different it is from state to state. We also discuss some of the latest news that's come out that will affect what happens to house prices moving forward. If you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can update you each time a new show comes out. Believe it or not, we're now 1/3 of the way through the year. And despite all the challenges thrown at them, our housing markets have kept rising for 15 months in a row. Now, not only have house prices risen strongly, but so have rents. Earlier this year, many commentators were forecasting that interest rates would fall. They thought it would be starting to fall by the middle of the year, but now the narrative is that inflation and interest rates are going to remain higher for longer than we'd hoped. In fact, the latest data has led some commentators to suggest that there could even be another rise in interest rates. So in this week's Property Insider Chat with Australia's leading housing economist, Dr. Andrew Wilson, I want to discuss his latest house price report, My Housing Markets figures, as well as the recent data that caught some commentators by surprise. Hi, Andrew.
Yeah, it's good day, Michael, and you're right. Gee whiz, we're a third of the way through the year already. The housing market certainly crystallised itself this year. It's been a good start to the year. We shouldn't be surprised that prices growth is continuing because our auction markets are turning over quite strongly. In fact, we've had a record number of auction sales over the first 4 months of this year compared to other similar periods. So it's been a very strong start to the year for auction sales, and of course that translates itself into house prices.
Well, it's a good in-time indicator of how both sellers and buyers feel, how many sellers are prepared to expose themselves at an auction, and how many buyers there are, the depth of the market. And there is quite some depth.
Well, there is, Michael, and auction clearance rates are likely to start to be lower consistently than where they were at the same time last year, because we have to remember that was a very strong period in the market. The markets were bouncing back from that quite a 2022 environment where, of course, we had those interest rate increases and that pent-up demand was being released. So we're not going to see that same sort of auction clearance rates, but we're still seeing high sales numbers because we're getting higher numbers of listings, Michael. And I think that reflects, that sellers are very encouraged by the market and they have confidence in the market, even though the volume of clearances is not as high. The clearance rate is not as high. The overall volume of sales is still at record levels. But as I said, I think that we'll see an easing of that going forward. But I still think we're going to see high numbers of listings into the auction market. But we did have our latest results now we can discuss over the April quarter. So this is the April quarter compared to the March quarter. Of course, if we look back to those March quarter results, they were very strong. We had a real surge in house prices over the March quarter compared to the February quarter, but no surprise, Michael, because we had that surge in listings we just discussed into the auction market, so and particularly higher priced properties coming into the market, and of course the 3 months till February is a quieter period because it does cover the holiday period. Fewer listings and the proportion of higher priced properties is at its lowest for the year. So no surprise, a little bit of seasonal impacts have affected house price changes over the last 2 months, strong month over March, and a consolidation following that strong month. So we didn't see prices actually move backwards, but we certainly haven't seen the same growth rates that we saw over March. And of course, we've got to remember also, Michael, that April is a significant holiday month. You know, we had an earlier Easter. It still was right at the end of March. But of course, we've had school holidays and Anzac Day, and this always affects the market through April. And
before you show the My Housing Market data, some people who are regulars will know how you do things. There's thousands of new viewers every week as well. So even though you say quarterly figures, it's the way My Housing Market measures them, but
yes,
it's really the month-on-month change that you're
yes.
about to report to us, not the quarterly change.
Yes, we take a 3-month snapshot of house sales. So there's 3 months of data, which is quite substantial. So we're looking at a large population of sales. So that's why we have a consistent and reliable model cycle. But we compare it to the previous month rather than a static quarter where we compare it to the previous the 3-month period before that. So it's a rolling quarterly or monthly rolling quarterly model. We do adjust it for mix, so that does tend to ease some of the seasonality. But because it's quarter by quarter, but month by month, we do get some seasonal effects occurring, as we've seen over the last couple of months. But our models are certainly very consistent with the other price models in the market. And our advantage is, Michael, we come out earlier than everybody else, and
Yes.
we're doing that now. We produce our data on the last day of the month. And as I said, our models are very consistent with the other models in the marketplace. And as I think our model is, we can emphasize the fact that we do have that 3-monthly snapshot of data. So we are looking at a high number of sales, not just 1 month's sales. So we tend to get less volatility, but we do have some exposure to seasonality. But I think that you
maybe another point to make is that you report house prices as opposed to unit prices, while some others actually report dwelling prices. And that can be confusing because the mixture of dwellings in Melbourne, which has got more apartments compared to the dwelling price that's gone up in Adelaide, which doesn't have as many apartments, you're really not comparing apples with apples, are you?
No, and we differentiate houses and units, and we provide price models for each. And with houses, we also include townhouses as part of our house model. So we don't separate that, townhouses and houses combined.
Well, they have a land component, so that makes sense.
Yeah, and that's what the ABS use for their models of houses. They combine houses with townhouses, and units, of course, are apartments, units, and those types of higher density dwellings. But getting back to the latest data, Michael, which is what we're here for, essentially. And we did see another increase in house prices, as you mentioned, the 15th increase in house prices we've seen in the current cycle. And the national house price was up by just 0.4% to 1,129,408 over the April quarter compared to the March quarter. 14 increases over the past 15 months. And when we look at the annual figures and when we roll the monthly annuals of our data, you can see how consistent that is, because that does take the seasonality out of the equation, Michael. And if we wanted to be really, offsetting seasonality, we could just use that rolling annual change to show that the difference from year to year on a monthly basis. But we're probably getting a bit too complex for ourselves there. But nonetheless, we have had that 10.5% increase over the year to April. And over the past 2 years, we're up by 5.3%. And of course, that's covering that quieter period we had in 2022, when we did see the first interest rate increases in a decade, which of course affected market confidence in the shorter term. But as we've sort of alluded to, it did bounce back quite quickly last year, particularly this time last year. The market gathered, a lot of momentum, and we did end up seeing most capital cities recorded 10% prices growth last year, which far exceeded the losses that were recorded the previous year. And just a note, Michael, on our methodology, our national house price is a national capital city house price. It is a weighted average house price, because of course we don't have a national house, wherever that may be, if it existed. But we use a weighted average, which of course looks at the volume of listings and sales, and that the higher weighting is from Sydney, Melbourne, and Brisbane, that have the higher proportion of actual activity. So it does, the numbers do actually favour those larger markets, but we don't discount what's happening in the smaller markets, and they're part of that model as well. So prices up by over the year by 10.5%, Michael, still rising at double figure rates. And when we look at the results for the individual capital cities, we can see that all capital cities, with the exception of Hobart, recorded an increase in house prices over the April quarter compared to the March quarter. And Melbourne was flat over that period, but all the rest had increases. The top performer was Darwin. Volatile Darwin, of course, we know that can bounce around because of smaller observations, smaller sales numbers from period to period. It was up by 2.2%. And the next highest was Perth, up 1.6%. Of course, that was another strong result from Perth, which has been a real leader in house price growth over the past year, Michael, really over the past 18 months. If we recall, last month, Perth was an actual underperformer. Its median price only increased by 0.8%. And there was some sense perhaps that strong growth was starting to impact affordability in the Perth market. But no, it's bounced back again this month, and one of the leaders in the April quarter growth at 1.6%. Brisbane continuing to grow, up 0.9%, and Sydney up 0.4%, Adelaide up 0.3%, and Canberra up 0.1%. So certainly lower numbers compared to the previous month's results, Michael, but still on the positive side there, except for Hobart and Melbourne, that was flat. But if we look over the year, we can see that there's been some strong results over the past year. Perth is up 22.8%, Michael, over the past year for house prices. Adelaide up 15.5% and Brisbane up 18.8%. That Brisbane market continues to be vibrant, carrying on from that boom that it had post-COVID, generated by a lot of that interstate migration. But good results there. But I think when we look at the 2-year results, I think that shows us where the energy from markets is still coming, Michael. And I think that when we look at Sydney, Sydney prices are just 2.9% higher than where they were 2 years ago. So there's a lot of value still in that Sydney market because buyers are still purchasing at around about the same levels as 2 years ago. And I think that's what's keeping that Sydney market turning over. Melbourne is actually 2.5% lower, Michael, than where it was 2 years ago. And I think that, again, offers very good value for Melbourne buyers, just lacking still a little bit of confidence, that Melbourne market, Michael, and yet to see the real surge in migration that we expect from Melbourne. But Melbourne's has been an underperformer of the major capitals, and we can see there that prices are below where they were 2 years ago. Still perhaps suffering a hangover from those very deep lockdowns that Melbourne suffered during COVID. So
not easy to forget, Andrew.
No, it's not. But I think if you went through it, you wouldn't forget it, as you did, Michael, and I did at one stage. So and Victoria has the worst performing economy of all the states. So, but I do think there's plenty of upside to that Melbourne market, plenty of value, that's for sure. We are seeing, and we'll release our rent report next week, Michael. We are seeing consistent growth in Melbourne rents now. So there's demand moving through from the rental market, which is likely to start to activate the house market, particularly from first home buyers. But interesting, when we do look at the Melbourne market, it's the mid to higher price ranges that have been underperforming, Michael, in Melbourne over the past few years. I'm talking particularly of the inner eastern suburbs, some of the inner southern suburbs as well, but particularly the inner eastern suburbs have really been dragging the chain. So quite interesting. I think that's a confidence issue as well, Michael, that the sort of aspirational higher priced buyers have been sidelined to some degree over the past few years in Melbourne. But lower, the outer east is going very well in Melbourne as usual, and the western suburbs also performing well in Melbourne. But we do digress.
So I think it is partly related to the poor Melbourne economy. If you're not sure about your business or your professional practice, you don't upgrade your home, you don't make big financial commitments. So there is quite some uncertainty in Melbourne about the government, about the economy, about the extra taxes, and that's making people sit on the sidelines just to see how it all plays out.
That's right, Michael. But I do think that, the pressure of undersupply, which Melbourne also suffers along with all the other capitals, high migration will accentuate that. And we're seeing that with a surge in the rental market. Rents are surging in Melbourne now. I think eventually we will see that market recover as confidence, which is something that's hard to measure and something that's ephemeral, I guess you could say, in a way that once it rises, it's like fear of missing out or fear of being involved. It's one or the other. And how do we measure that and what causes one or the other? But when it does happen, it's very hard to shift one way
It
or the
happens
other.
very quickly too. If we look back what happened in previous times after the surprise 2019 election, consumer confidence in general changed, and our property markets boomed. 2020, at the end of 2020, 2021, when people started to get comfortable with COVID, consumer confidence, buyer and seller confidence moved very quickly. In fact, usually buyer confidence increases before seller confidence.
Yes,
That pushes up prices, doesn't it?
Yes, and that's because, sellers have more skin in the game, in a sense, whereas buyers can, given their circumstances, of course, can speculate on good value opportunities, and particularly investors move into the market following or, at the bottom of the market, because they do see those good value opportunities emerging. And then they're followed by owner occupiers. And then we start to see the seller surge. And we're seeing the seller surge this year, Michael, quite clearly in the auction market, and high numbers of auction sales, reflecting the confidence now that sellers have in our housing markets. So house prices consolidated, very strong growth over March, over April. As we mentioned, some seasonal effects there. Active April is the holiday month, typically, of course, and March was a very strong market because it was the first real month or the first real quarter of the year when markets were fully engaged following the holiday break through the Christmas period and the New Year period. Units similarly, Michael, units up 0.7%, national unit price, so a little bit stronger than house prices. The median unit price now at 646,962, and not quite as high the growth over the past year, but still positive, up by 8.1%, the national unit price over the past year, and certainly a little bit more volatile, particularly towards the end of last year, the unit price, the national unit price, but not to be outdone, it certainly has bounced back quite quickly to overcome some of those, particularly the January quarter data, which was lower, but has bounced back quite strongly since. Most capital city prices were higher over April. Perth, the top performer, up by 1.5%, followed by Brisbane, Melbourne, Canberra, Adelaide and Sydney that were up by 0.9, 0.7 and 0.2% respectively. Darwin and Hobart unit prices, however, were lower by 2.2% and 6% respectively. But no surprise there, because they are, well, particularly Hobart, of course, is a smaller unit market. There's only a small number of units, certainly proportionally, of units in that market. So those numbers tend to bounce around depending on the mix of properties that come through. Over the past year, Brisbane, the big mover in unit prices, annual unit prices, Michael, up by 22.2%. Perth also, of course, similar to houses, up by 23.1%. Again, Perth has a smaller unit market, so that can tend to be a volatile scenario. But those annual growth figures are a good measure, a consistent measure of the market beyond those month-to-month results, quarterly results. So Perth up 23.1%. Adelaide up 17.9%. I always find it interesting to see how strong unit prices are growing in Brisbane, Michael, considering we had, I think, a couple of years there of doom and gloom headlines around the prospects of the Brisbane unit market, oversupply in Brisbane. You won't be able to sell a unit market in Brisbane, so the so-called experts were telling you for decades, and now we have a chronic shortage of units, well, probably not just in Brisbane, but in most other capital city markets, and that's what's seeing that very strong growth in prices. And over the past 2 years, up by 30.7%, Michael. The median unit price in Brisbane up by 30.7%. Of course, a lot of that is a higher priced unit now is becoming popular and available in that Brisbane market, which has pushed up prices. But nonetheless, Adelaide's up 29% over 2 years, and Perth up 22%. And again, when we look at the comparisons over 2 years with Sydney and Melbourne, it's a similar story to houses. Sydney up by just 2.1% over the past 2 years. So prices are units are around about the same level as they were 2 years ago. And in Melbourne, they're similar to houses, down by 2.8%. So there are still good value opportunities for unit buyers in that Sydney and Melbourne market compared to their previous peaks. And I think that's what's particularly driving the Sydney market. And we are starting to see higher clearance rates for units consistently in Melbourne and Sydney on a weekend basis. So that really does reflect that those value opportunities, with prices really tracking around about where they were 2 years ago. So a consolidating month for both houses and units, Michael. Same old suspects growing strongly, those smaller major capitals, if I could describe them as that, which is Perth, Adelaide and Brisbane. Sydney's still tracking along solidly, and Melbourne the underperformer of the major capitals, but consistently, as we discussed, offering value, but perhaps a market that's lacking a little bit of confidence at the moment.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with my team at Metropole to discuss your goals, your options. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. At Metropole, we're big enough to tip the scales in your favour, but still small enough to care. And since we don't sell any properties, our advice is independent and unbiased. Now remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, the right advice is critical. So if you're looking to invest in property or buy a new home, go to metropole.com.au and have a chat with our multi-award winning team. It's a great feeling having the team at Metropole on your side, levelling the playing field. Well, Andrew, there's still the underlying factors of strong population growth,
Yes.
and undersupply of properties, rising rents that are going to drive our markets in the short term. But over the last couple of weeks, the bogeyman of inflation has raised its head again. Inflation isn't coming down anywhere near as fast as the Reserve Bank would like, or in fact, what most Australians would like. And there's the oil prices overseas that are going up, and in America, there's talk about them maybe even raising rates as opposed to dropping rates. All this is going to temper our housing markets here. It's going to confuse buyers, and when they're confused, they may just put off their decisions for a short while.
Well, look, Michael, we have been sceptical about a lot of this narrative that's been emerging, particularly in Australia, for interest rate cuts. We felt that the economic drivers just were not there for an interest rate cut, particularly in Australia, whose interest rates are higher and its inflation, its interest rates are lower, but its inflation is higher than the US. And the US market, whatever the market is, was predicting 7 cuts this year. Now they've gone to perhaps 1 this year, because they've had 3 months in a row of higher inflation. But our skepticism was driven by the fact that inflation's really been driven by underlying supply constraints, which aren't going to be eased or solved anytime soon. We're talking about a lack of housing, high energy prices, and high oil prices. There's really nothing much we can do about that. It's driving high rents, house costs, affordability constraints. And we've seen the price of oil, as we have discussed, Michael, rising really since November last year. So no surprise that's finally tracking its way into inflation. And I think the Reserve Bank has got a very difficult decision coming up for May. We've seen now underlying inflation is now at 4%, driven by the same old suspects, higher house costs and higher oil prices. And if we look at the oil price so far over April, Michael, it's actually still increasing compared to April a year ago. So we can expect another increase when we get those April inflation figures in a month's time. So the Reserve Bank, I'm not sure that they have the courage to preempt what is likely to be another increase in inflation, but there'll be questions asked if there is, and we sort of get behind the 8 ball. And I think the Reserve Bank's been a little bit caught out because it certainly eased or stopped the increase in interest rates earlier than any of the other major, particularly the US economy, and maybe paying a little bit of a price for that now. But as I said, our problems are on the supply side. We need more oil, we need more houses, we need more energy to drive inflation down, and that's just not going to happen The constraints for those supplies of those essential items are such that, we really can't change that. So what it means is the Reserve Bank is left with, well, we've got to reduce demand. And how do we do that? We have to increase interest rates. That's our plan. That's our model. And what does that mean? That means higher unemployment. And as you said, Michael, we've still got this crazy strong economy. Wages are rising at record rates. We've still got unemployment rates with a 3 in front of it. Can you believe that? This is back to the 70s. So, demand is still quite clearly strong and hasn't been affected at all by higher interest rates. So tough decisions coming up for the Reserve Bank, Michael. And I think that if we do get an interest rate increase, it's not going to affect housing affordability per se, because the only thing that will really turn that around is more houses, and that's just not going to happen, or else we cut immigration again, and that's not going to happen. So I think upward pressure on prices and rents is here to stay, because we've just run out of houses, Michael, and we're not going to stop migration. So regardless of what happens with interest rates, and as I said, we've still got a very, very strong economy, and it will take some time, if the Reserve Bank decides it has to reduce demand through higher rates, for that to occur, for inflation to get under control. So it's either, the sledgehammer, or we decide to live with higher inflation for longer. Perhaps that's the result of all this.
Well, in summary then, April home prices were still rising, a little bit slower than before, still some headwinds ahead, but the fundamentals mean that over the long term, property values are going to still increase. Look forward to catching up with you next week for our regular Property Insider chat and get your My Housing Market rental report.
Thank you very much, Michael.